Most traders enter the market thinking trading is about quick money, fast profits, easy freedom, constant excitement. And because of this mindset, many traders emotionally treat trading like gambling instead of a professional business. But after enough time in the market, profitable traders slowly realize something very important. Trading becomes more stable when you stop treating it like entertainment and start treating it like a real business. And that is exactly what I want to talk about in this video. How I treat trading like a business and the trading psychology behind long-term consistency. Because the way you think about trading changes the way you behave emotionally, and your behavior ultimately controls your results. If you stay with me until the end of this video, you will understand the psychological difference between emotional traders and professional traders, how business thinking improves emotional discipline, and how you can slowly build a professional trading mindset over time. And if you want to continue building a strong trading mindset, consider subscribing to Bull Mindset. This channel is focused on trading psychology, discipline, patience, and long-term consistency. Now let us begin with one important truth. A real business is built on consistency, not emotional excitement. And profitable trading works the same way. Most emotional traders chase fast money emotionally. They constantly search for huge wins, huge risk, huge opportunities. But professional traders think differently. They focus more on stability, consistency, risk management, long-term survival. And this psychological difference changes everything. Now let us go deeper. Imagine someone running a professional business. Would they emotionally risk the entire business in one day? Would they make random decisions emotionally? Would they ignore risk management completely? Of course not. A real business operates with structure, planning, discipline, and controlled risk. Profitable trading requires the exact same mindset. Now let us talk about emotional behavior. Most losing traders emotionally react to the market every day. One winning trade creates excitement. One losing trade creates frustration. One missed opportunity creates emotional panic. And slowly, emotions start controlling decisions. But professional traders treat trading more like a business operation. They stay calmer emotionally, more structured, more patient. Now let us talk about another important truth. Businesses focus on long-term growth, not short-term emotional results. This is extremely important psychologically. Most emotional traders judge themselves based on individual trades. One bad day destroys confidence. One bad week creates emotional panic. But professional traders think differently. They focus on long-term consistency, monthly performance, yearly growth, stable execution. This long-term thinking reduces emotional pressure significantly. Now let us talk about risk management. One of the biggest differences between emotional traders and professional traders is how they think about risk. Emotional traders often risk emotionally. They increase position sizes after excitement. They revenge trade after frustration. They chase recovery emotionally. But business-minded traders protect capital carefully because they understand something important. Without capital, there is no business. And this mindset creates emotional discipline. Now let us talk about routines. Every successful business operates with systems and routines. And profitable trading requires the same structure. Professional traders usually follow stable habits daily: market preparation, chart review, trade journaling, risk management review, emotional self-awareness. These routines reduce emotional randomness, and stable routines create stable behavior. Now let us talk about another important truth. Businesses understand expenses are normal, and traders must learn to think about losses similarly. This is one of the biggest mindset shifts in trading psychology. Most emotional traders see losses as personal failure, but professional traders understand losses are part of the business model. Not every trade wins, not every week is profitable. And once traders emotionally accept this reality, pressure decreases significantly. Now let us talk about patience. Most businesses grow slowly over time, and profitable trading works similarly. But emotional traders often want instant results, fast profits, quick success. And this emotional urgency creates impulsive decisions. Professional traders stay patient. They understand consistency compounds slowly. If this video is helping you understand trading psychology more deeply, consider subscribing to Bull Mindset, because mindset is what separates emotional traders from disciplined traders. Now let us move into another important lesson. Professional traders focus more on process than emotional excitement. This is deeply important. Most emotional traders secretly enjoy the adrenaline of trading. Fast movement, constant action, emotional highs and lows. But business-minded traders focus more on execution quality, discipline, patience, risk management. This emotional stability improves consistency. Now let us move into real trading examples. Imagine a trader who experiences 3 losses in a row. Immediately, frustration appears. Emotionally, they feel pressure to recover quickly. So they increase risk emotionally, force trades impulsively, and suddenly, small losses become large emotional damage. Now imagine another trader who treats trading like a business. They experience the same losses, but behavior stays stable. Same risk, same discipline, same patience. They understand losing periods are part of long-term probability. This mindset protects emotional stability. Now let us consider another situation. A trader experiences a strong winning streak. Excitement appears. Confidence slowly becomes overconfidence. Risk increases emotionally. Discipline weakens. And eventually, emotional behavior destroys profits. Now imagine a disciplined trader. They experience the same winning streak, but behavior stays controlled. Because they think long-term. They understand emotional overconfidence destroys consistency. Now let us talk about another important psychological difference. Businesses track performance carefully, and professional traders do the same. They journal trades, review mistakes, study emotional patterns, track consistency. Most emotional traders avoid reviewing mistakes honestly because ego becomes involved emotionally. But professional traders focus on improvement instead of emotional protection. Now let us talk about emotional discipline. Business-minded traders understand emotions cannot control decisions. Imagine a business owner making random emotional decisions daily. That business would become unstable quickly. Trading works the same way. Emotional decisions destroy consistency. Disciplined decisions protect consistency. Now let us talk about another important truth. Professional traders think more like risk managers than gamblers. This is deeply important psychologically. Gamblers chase excitement. Professional traders protect survival. They avoid emotional chaos. They stay selective. And this mindset creates long-term growth. Now let us talk about emotional maturity. Emotional maturity means accepting uncertainty calmly, accepting losses calmly, accepting slow progress calmly. This emotional stability creates better decisions. Most emotional traders react emotionally to every outcome, but professional traders remain balanced during both winning and losing periods. Now let us talk about another important lesson. Businesses focus on systems instead of emotions, and profitable traders do the same. They trust routines, rules, processes, risk management, not emotional feelings in the moment. This structure reduces impulsive behavior significantly. Now let us talk about self-awareness. Self-awareness means understanding your emotional patterns clearly, understanding what triggers fear, understanding what triggers greed, understanding what creates impulsive behavior, because awareness creates emotional control. Most emotional traders react automatically. Professional traders observe themselves constantly. Now let us move into mental frameworks that strengthen business-minded trading psychology. The first framework is long-term thinking. Judge performance over months and years, not individual trades. The second framework is process over profits. Focus on execution quality. The third framework is emotional neutrality. Stay balanced during both wins and losses. The fourth framework is capital protection first. Protect survival before chasing profits. Now let us move into practical exercises. The first exercise is creating a structured daily routine. Set preparation time, review time, journal time. This builds stability. The second exercise is emotional journaling. Write down emotional reactions honestly after every session. Fear, greed, frustration, impatience. This builds awareness. The third exercise is reviewing weekly performance calmly. Study mistakes objectively instead of emotionally. The fourth exercise is reducing emotional pressure through smaller risk. Smaller risk creates calmer thinking. The fifth exercise is tracking discipline instead of money. Ask yourself daily, did I follow my rules? Did I stay patient? Did I protect risk? Now let us go deeper. One of the biggest reasons traders fail is because they emotionally depend on trading outcomes. A winning trade creates happiness. A losing trade destroys confidence. This emotional instability creates inconsistent behavior. But business-minded traders emotionally detach from individual outcomes. They focus more on consistent execution over time. Now let us talk about emotional recovery. Every business experiences difficult periods, and every trader experiences difficult periods too. Losses, frustration, drawdowns, self-doubt. But disciplined traders recover differently. They slow down emotionally, review calmly, reset mentally, and continue following their process. Now let us talk about another important truth. Trading success often looks boring emotionally. This is difficult for many traders to accept, because emotional traders secretly want excitement. But boring trading is often disciplined trading, calm execution, controlled risk, stable routines. And this emotional calmness creates consistency. Now, let us move toward the final message. Treating trading like a business changes your psychology completely. You stop chasing emotional excitement. You stop reacting impulsively. You stop thinking only about fast profits, and you begin focusing on stability, discipline, risk management, long-term growth. Let me leave you with one final thought. The market rewards disciplined, business-minded traders far more than emotional gamblers. And the traders who succeed long-term are usually the traders who learned how to stay emotionally stable under pressure. They became calmer, more patient, more structured, more disciplined. And if you continue strengthening your mindset, your decisions improve. If your decisions improve, your consistency improves. And if your consistency improves, profitability becomes possible. And if you want to continue building that mindset, subscribe to Bull Mindset. I will see you in the next video.
Thanks for watching.